Okay, so good morning, everyone. Welcome once again to our weekly webinar. Delighted you could join us today. I was just saying to John there that the pendulum has swung somewhat from the huge optimism and the seemingly maybe out of the woods regarding this virus, and perhaps the pendulum swung a little bit back, John, towards maybe we're not out of the woods yet.
Not to repeat what I said a minute ago before you hit record, we are definitely in highly predicted territory, and people just need to plan for uncertainty, and that means have business plans for your properties, for your deals, for your construction, whatever it is you do that can accommodate this moving target.
Yeah, absolutely. Okay, so today our topic is very much around education, our learn our own mantra. So today we're going to focus on learn. We'll talk a bit more about that in a minute. You all know me by now, I'm sure. David Johnson, CEO of LEOcrowdfunding, property crowdfunding platform, and my co-host, Mr. John Corey of Property Fortress. So I think most attendees know who we are, John, and you can get on to the next slide. So market update, and again, interesting that perhaps even
so
since,
David?
Yep.
You need to move slides with your mouth silent, and then when it settles, because you're really breaking up badly this morning every single time you switch slides.
Switch slides, okay. That seems to be a common theme. I will indeed. So in terms of property market update, again, selected just a couple of interesting items, John, out of the news the last couple of days. Again, some of these may well change slightly given what's happened in the last 48 hours or so. But I suppose the interesting one initially that caught our attention during the week was the Bank of England talking about the property industry booming as other sectors wilt. And again, it's just, I know we keep saying it, repeating ourselves, but it is interesting that we can so quickly go from doom and gloom to crisis to property crashes to the worst crash in history to then all of a sudden the Bank of England talking about a property boom, but a few short months later. I guess the longer you're in property, the more you're used to this type of swings and roundabouts.
Yep, it depends on which horizon you're looking at. Actually, very few people have truly lost their job and have no state support. People are not dying in super high numbers, so we still have a shortage of housing. There's a stamp duty holiday, which helps anyone that does want to buy. More than half the country has no debt on their primary residences, so they're not affected by interest rates, they're not affected by mortgage terms. Most people are not moving house anyways. Even in a healthy market, it's something like 10% or less. So, you know, the data tells you something about a bigger picture, but it's a very particular slice of the data. Just like your fuel gauge in your car doesn't tell you where you are. It just tells you what's in the tank.
Yeah, absolutely. And I suppose the one thing that I always refer to when it comes to these type of reports or articles is that confidence can play a big part in people's mindset in any market. So while the data and the stats are what they are, there can be spin put on them for whatever reason. But if people have a degree of confidence in a market, then that does help, I think, the market grow, expand, get back on its feet, whatever that is.
Mm-hmm.
So the next
when buyers lack confidence, landlords do better because tenants tend to stay, rents tend to go up because shortages happen for rentals. When prices are falling, landlords win because, again, tenants stay. And when prices are rising, tenants do move out as buyers, but landlords win because their assets go up in value. So being a landlord with a conservative gearing tends to be a no-lose proposition.
Yep, okay, very good. The middle one there we're not worried too much about, but there's still ongoing evictions, discussions and changes and all the rest of it. I don't think that's going to necessarily have a massive impact on the market, perhaps in certain areas. I think the one on the right caught my attention, John. We both know people who are involved in the auction business. I certainly started out, and when I started property investment 20 years ago, a number of properties I purchased were through auction. It was a good source of below market value. lot of reports talking about some of the big players in the market are indicating that perhaps that's the end of sort of hotel ballroom auctions, and that even after COVID, it may well just continue online. That's coming from some of the big players, which is interesting.
Yeah, I think this is an example. There's a lot of changes on the edges, like whether shops need workers and all the rest of it, or whether shops need customers. Auctions, how to maybe standardize information, make it easier online. I think that's very interesting. People still need to buy and sell. Whether auctions will replace agencies at some level because it's actually somehow safer or cleaner, we'll see. These are the ways that this change in the market will twist things around and make it different.
Mm-hmm. Yeah, it's certainly been interesting, and how whole industries can change sometimes because of events is also interesting. So I want to highlight this on the call today, John. Something again we have talked a lot about. I know you're very passionate about deals that you've invested in on whatever platform you've invested in. You always want to have good updates from the fundraiser, from the developer. And it's something that we've been looking at for a number of weeks now. We're about to roll out sort of a standardized format where we can update the investors and projects in a templated, detailed way, so they become used to where the new information is. But I suppose, firstly, in terms of just updating as a passive investor yourself, why do you think regular updates from the fundraiser is important?
Frankly, it's just a confidence boost. I like to know what's going on. It sort of feeds my ego of, do I understand what's happening with my money? Also, I see it as a way to learn, particularly say this one that you're showing. It's a planning project at a scale that I don't work with generally. But if I can be vicariously learning or a fly on the wall of the project, that's always good. I like the intellectual stimulation besides a perceived security of I know what's happening. The other thing that I do like is when there are regular updates through a platform, then if I don't pay attention to emails, I know I can see the back history. It's all there, so it becomes quite easy. I know where to go to look. I know if I miss something or not, I can check in with it, whatever I feel like.
Yeah, and that is very important. It becomes like a library of updates that can just be stored in a folder, and then you can follow. Particularly when it comes to the learning side, then it is easy then to follow through. And when problems have arisen, the problems are discussed. So on our templated, as well as sort of an update on, is it delayed, is it not delayed, is it on target, or the actual costs on budget, over budget, etc. There's a whole section on sort of the educational learnings, and we want the fundraisers and the project owners to actually discuss some of the challenges they've experienced or things that have went wrong they didn't foresee, and then how they solved them, how they addressed that problem. And that's part of the learning for the investors to understand, the problems that can arise, because problems certainly will arise in virtually every project, but they understand how fundraisers solve these problems, and it just gives them more confidence in the future when they're doing other deals. So this is our new format. So over the next probably 5 or 6 days, a number of projects will have this sent out to the investors. So investors can watch out for those. So our live project we have currently on the platform is our 35 West buildings. This was launched literally just a week ago. So it's only a week into the raise, and this was one that was a little bit different than what is normally done on crowdfunding. It was a sort of 6-year project, and we were looking to put together a pack on this and obviously engage with investors. So we actually had, I think it was about 17 investors are already invested on it. We're still literally just the first week of the project. So very much normal, John, in terms of normal projects, that a bit of momentum at the start, then investors asking questions, trying to understand the deal better, getting those questions answered, and then you see the normal sort of momentum building then as you go towards the close date.
Mm-hmm. Yeah, I mean, it's fairly common. In fact, the prior mock-up of the investor report that you use, that is actually a project that had the same pattern. I think they even extended their close date when that project was being funded. So we saw activity at the front, sort of a flatter period, and then a spike or so at the end. I've seen this in other platforms too, where it just depends on the project, the marketing, how quickly people get their head around it, versus the alternative is sort of that rush in the first day. There are some projects that for whatever reason fund in under a day, and then there are most projects that fund over a period of time. And the nice thing about this is you can use this opportunity to develop your brand and get the message out, find out what works. It's actually almost counterproductive for future deals. If you're trying to learn what the market wants, getting funded in a day doesn't teach you very much. You really don't know why that happened.
Yeah, very much. So this model is very much kind of recycle your funds. It's a model that revolves around investing, but then having some of your money back after 1 year. So it's not just necessarily your normal sort of traditional money in, leave it for a year, money back out again. What's the return? This is very much about understanding a strategy of recycling your funds over a period of 6 years in this case. So we have another webinar then on Monday night. This is the second one in the run, and this one on Monday night is going to be very much focused on some updates on the project. There are some things that have new information that will help investors make a decision on the project. So we're going to update on that. And there's also an opportunity for Q&A, and we have had a lot of questions on this, and people just want to clarify certain aspects of the offer document. So again, Tina and Andy made themselves available to be on the webinar, and we get a chance then to sort of deep dive into some of the questions. Now, in the first webinar, you're limited to 25-30 minutes really of if you like presenting the information. That just isn't enough time to go into all the information that you would like to. So this second webinar gives the opportunity to discuss some things that just to really get a chance to discuss in detail in the first one, and also deep dive. So for anyone who's still interested in looking at this project, then it's well worth getting on Monday night, get the updated information, hear the Q&A, and be better informed when you make your decision to actually invest. I'll maybe put that chat, get the link fired in the chat box, but if anyone wants to just take a quick screen grab, you can see the link for the webinar on Monday night. That's Monday, 20th September at 7 p.m. So what we're about today, John, is really get into this about education. And again, something that I know both of you and I share a bit of a passion for this. I think no matter what I've done in life, I've always wanted to learn more about it. In the world of football, as a player, coach, and a manager, I'm always buying books, reading books about successful people, successful managers, their concepts, their philosophies, be it the military. Again, I suppose when you head to Iraq and second in command of 100 men, you want to learn about leadership, you want to learn about team cohesion and task cohesion. So I think my library behind me is maybe a bit of a giveaway, John, as to a bit of an avid reader. And education is just vital. It's exactly the same in property. When I started in property, I just couldn't get enough of some of the courses, education and learning. And I'm sure you agree. I know it's a passion you have, that education and learning is at the heart of property investing.
Acquiring knowledge is really important. Applying it is going to be the difference between success and failure. I mean, there's a lot of brilliant people who are super smart and aren't very successful because they don't apply it. So there's an opportunity to balance this out. And one of the things about Leo is the ability to learn, earn, and own, so that you can actually, you don't have to take a bunch of classes and then jump off a cliff and buy a massive deal. You can actually incrementally learn and earn as you go. So we'll cover that in a minute, but it is interesting that it's applied education that matters the most.
Yeah, absolutely. So the mission of Leo crowdfunding is to help investors learn why do they earn, how to own property assets by leveraging the power of the crowd. And my vision in getting involved in property crowdfunding was very much about this vision of the masses being open to and being able to get involved in property investment, often in deals that traditionally were for high net worth or for institutional investors. So that was my vision, that was my passion, to educate, to get the information out to the masses so they can benefit from property crowdfunding. So what I've done, John, to keep it simple, I've put learn in the middle, and I've put what I think are the key things that people either need to learn or need to learn more of, or that are most relevant to learn in the world of property investment. So, I mean, let's just run down these, spend a few minutes on each, and give people a steer as to what they should be thinking about. I'm trying to get people to understand this is the areas they need to be thinking about. So the best place to start, property fundamentals. I mean, you've got to learn, you've got to understand those. So when someone says to you, John, for you, what are property fundamentals? What are some of the key aspects of that?
Well, maybe to slightly dodge the question, but I was talking to a client yesterday, and we were talking about how to structure a deal and possibly later bring it to crowdfunding, the fun part of it. And I said, ultimately, the asset, the property, the business unit, it can only produce certain types of income. It can only have certain types of behavior. So if people who are trying to master being a property investor understand that you can't get water out of a stone, you can't make a property deal better than it inherently is. And when you're doing due diligence, if you focus on, do the basic numbers add up? If it's a single let or an HMO or a commercial building, there's certain constraints where most of the deals will perform a certain way. If this is a deal that fits sort of that middle of the curve, then there's probably some core reality here. If it's a real outlier where it's like no other single let has ever done that, then there's something either weird or unique, and you have to then figure that out. It doesn't mean it's bad. It just means you need to figure out why this is off the curve. So there are fundamentals for buy and hold. That's, what can a renter pay? You can't get more than probably the market average. I would say tenants actually determine the rent, not landlords. The same with prices. You can't sell for an inflated price if there aren't any buyers that want to buy it at that price. And why they buy is up to them. So the fundamentals of a property deal are really the core. Once you get a handle on that, the rest of this becomes interesting.
Yeah. And even a step before that, the property fundamentals, I also think include things just like the economy in a given country. It involves things like interest rates, inflation, and also principles like compounding. People need to understand those things if they want to become a property professional, because they affect the environment with which we operate. And then you have the property fundamentals for individual deals of how you do that. So within the UK, again, for me, one of the key fundamentals that isn't going to change anytime soon is that we keep being told we're about 300,000 houses short on what's needed in the UK. And irrespective of COVID, irrespective of economies up and down, that need for housing is not going to go away anytime soon. And therefore, being involved in property in whatever part of the market you're involved in, you're involved in a market where right now supply does not meet demand. And I think that's an excellent fundamental and a driver to be involved in this business. So from property fundamentals then, understanding those, you then move into the investment strategies. And I sometimes say that you can't really talk about property in isolation. Of course, we're not IFAs, we're not giving any financial advice, but I would always say to people, look, if you're going to look at property as a strategy for investment, well, take a little bit of time to understand what are all the different opportunities you can invest money in. You've got your stock markets, you've got commodities, you've got your alternative investment market. At least be aware of all of that, and then compare property to it, and be clear as to why property is such a good option for many people. And then within that, as you're saying, John, I think investment strategies is the different types of property. So you want to just run through those just very quickly, maybe just the main type of deals someone could get into property doing?
So are we talking deal analysis, that circle at the bottom?
No, more just the different markets, sort of commercial versus residential would be the first obvious. So what are the key differences in those two as strategies?
Well, one of the funny things is you could think of it, what uses can people apply to different opportunities? So there's residential, and there's short-term and long-term, so student lets or SA, service accommodation, versus long-term by rental properties. You have homeowners that owner occupied. That's a big part of the residential market. You have commercial, where it's a warehouse, an oil refinery, an office building, a retail shop for sandwiches or something. So almost one way to think of this is look at how people use it, and to some degree the planning regulations align with that. They look at how usage is and how it's designated. Medical clinic versus a sandwich shop, are they actually the same in planning or not? And that will tell you a lot about the micro or niche segments within property, how the different uses, and sometimes the biggest opportunities are when you change use. If you can move one type of property to a different type of property and the usage is more in demand, commercial to residential transitions, you'll see quite a bit of that because there's more demand for residential than commercial.
Yeah. Okay, so certainly within that, and I always say to people, normally when people talk about property, they'll say the most important thing is location, location, location. And that is probably true when it comes to buying property. When it comes to property investment, John, my mantra tends to be the most important thing is strategy, strategy, strategy. I.e., you've got to have your strategy and you got to stick to it. I see people jumping from different strategies. They go to a course and they pay £1,000 for a course, and then they go off and do that, and then a new course comes out and they jump on that course, and then they're off doing something else, and there's no focus on a strategy. And I think it's one of the biggest mistakes people make in property is they try and do everything rather than just saying, I'm focused on this one, this is a rabbit I'm chasing, and get on and become an expert in that strategy.
Yes. Yep.
Rather than this idea of just looking for the quick buck that can be got because you went to a course or read a book.
Well, one of the funny ones, I spoke to someone else last night, and there's someone I know from the meeting I run, and she's an expert in service accommodation in her niche, and she does a rent-to-rent business model. And she's actually seen an increase in demand. She's grown her portfolio. So the virus has been a positive, neutral to positive rather than a negative. She collaborated with her landlords to get a better deal during the difficult period. So it's about bringing expertise to get a good return on your money, because you can add your expertise rather than you don't know what you're doing and you should actually probably just earn the average return, which is quite low compared to the expert return.
Yeah, no, that's a good point. So property fundamentals, investment strategies, then the big one of deal analysis. And I think it's almost impossible to be successful in any degree in property investment, be as an investor particularly, but also as a fundraiser, if you're not able to analyze deals properly. So again, maybe just hitting the high points. Someone says to you, John, I'm looking at a deal, what should I be looking for? What are the key things I need to analyze?
So this goes back to knowing the first two. So what type of property deal is this? Is it residential? Is it commercial? If it's commercial, is it retail or offices or whatever? So how you analyze it is based on the type of deal. You also have to understand your local market. So local demand, population trends, infrastructure changes. So there's a lot of nuances, but otherwise it's, do the numbers add up in a certain way? Once you get used to analyzing within your particular niche, you'll be able to quickly blast through a bunch of deal analysis, because SA in a certain location, they're all going to look sort of the same. Therefore, you're going to know which variables matter. Or single lets, if you're up in the Northeast or down in the South Coast or wherever you are, there'll be a certain core set of things that are always true for single lets. And then you look at the local market nuances, maybe family homes versus something else. So the deal analysis is where the numbers really matter, garbage in, garbage out. But once you get used to what is reasonable and what it makes sense, and one of the easiest ways, by the way, to figure this out, go to the property site, LEOcrowdfunding, look at all the other deals, start getting comfortable with the numbers. You don't have to invest a dime, but just use them as examples of, do these numbers stack up? Do I understand these numbers? If I don't, post a question. Start to really get good at cutting through the BS and understanding how numbers are checked.
Yeah, speaking of questions, of course, people can add or ask questions in the Q&A. We don't use the chat box, but by all means, jump on the Q&A there. One more thing on deal analysis I think is very, very important, John, in my experience, is emotion. When you come to deal analysis, you have to leave your emotion at the door. And too often people have an emotional attachment to a deal that's been brought to them, and that gets in the way of just in the cold light of day analyzing it using what you talked about. So, a classic, a guy supports a football club, he gets offered to buy the property in the town or the city that his football club is. So, oh yeah, it'd be great to own a property there because I support that team. But the analysis is nowhere near meeting the standard of a good deal. But he's caught with emotion. So again, there's any amount of those things that can play in. So take emotion out of deal analysis. Have your criteria. Have what's important for you. And then when they're laid out, you can very easily match off a deal against your criteria. That's very, very important.
So one way to help with that, and you could maybe call this confirmation bias when you look for things to confirm that you're making a good decision. So just make a mental decision. Okay, now let me find the things that would screw the deal up. Let me identify how far the interest rate would have to move, or how long the voids would have to exist, or what other problems you might have before the deal goes really bad. So look for the reasons that the deal might break.
Mm-hmm. Well, one last quick one. It's just come to me as you were talking there. How much would you put on your gut? So, property is in some ways it's a science. In some ways, when it comes to deal analysis, it's a science, not an art. But you would say 0. So if you had a good fundraiser, someone with a track record, and they have a deal that might just have a couple of areas that might give cause for concern, but overall you're thinking, you know what, this fundraiser knows what they're doing. It mightn't quite tick all my boxes. You would still say,
So there are people who aren't watching, just listening. I'm holding up 0 when that's why he keeps pivoting his question. So here's the point. If you're not comfortable and your gut's saying, watch out, your gut has no brain. There is no such thing as a brain in your stomach. This is just sloppy English for you don't know what's wrong, but your subconscious is trying to break through. And the only way for your subconscious to break through is to maybe make your stomach feel bad. So that's a perfect opportunity to say, okay, post a question. I like the deal, but I'm not feeling right about it. What am I missing, folks? Or try to tickle it out, because you can learn quite a bit when listen to your gut, if that's what you want to do, as if it can talk also. So it thinks and talks, really. But try to get to the bottom of it.
This is a UK idiom. This isn't a USA idiom.
No. It is a US idiom too. It's a fairly universal one. It's actually your neurological system trying to tell your conscious brain there's a problem, but it can't tell you in a way that you understand. So it's a signal that you should dig deeper. It's a signal that you should ask around. In crowdfunding, it's a signal you can just pass or put in a level of money that you're willing to completely lose, so you can see what happens later, to see if what it is you were sort of detecting, but you couldn't put your finger on. So it's a learning opportunity, but don't flagrantly just waste money. At the same time, if you go with what your gut tells you, well, your gut it's not a thinking organism, and your subconscious saying, I sense something, but I don't know how to tell you conscious. So let's get it into facts and then build it into your checklist.
Yeah, interesting. Okay, no, good answer. Thanks for that. Okay, the last one is the power of crowdfunding, and we don't need to spend too long on this because this will form a large part of next week's when we move from learn as to how you can earn money through property crowdfunding. But in terms of the main bullet points, for me, John, both from an investor side and from a fundraiser side, I just loved, first of all, was the crowd validation, that a deal is brought to an online platform. There is a degree of regulation in this market. There are authorizations that have to be received, and licenses, etc., to operate. So you have a market where deals are hosted, fundraisers come, investors come, but the idea of crowd validation, lots of people looking at one deal, I think just has so many benefits in this market.
So I agree. I think there's an element of, there's a funny line between herd mentality, and there's also then the ability of specialists ask questions. And in particular, in the West Buildings example that's open right now, there's a person who's quite sophisticated in the mortgage market asking a bunch of questions. at a level of knowledge that maybe some of the rest of us don't have. So we're benefiting from their specialist knowledge and raising certain questions at certain points. And then you get to see how the party raising the money responds, the transparency engagement. So it's a really good, healthy environment to see what's going on, and everybody's working from the same facts, everybody's working from the same documents. In particular, though, I think on the other side, it's a way of statistically helping you avoid putting all your money into one thing. So if a plane was to crash or some other one-off occurrence that you couldn't easily predict, you could be very much harmed if you had your money in one deal, where you can spread it around a few deals and sort of use the law of averages to smooth out the unexpected.
Yeah. In terms of fundraisers, then they have the opportunity to bring deals to a tribe of investors who are motivated because they've registered on a platform, because they're looking for deals to invest in, and providing the fundraiser can bring deals that the investors like, there's a good possibility of having deals funded, as well as just simple brand building. A fundraiser or a developer or someone who wants to obviously raise funds for a project, whatever that is, can literally market themselves and engage with and develop a relationship with a whole bunch of investors through a platform. And that has got to have so many positives in terms of learning how to do that for fundraisers and develop a whole new investor base.
Mm-hmm.
So again, we'll deep dive more into, if like, the power of crowdfunding and the different ways of earning on that next week. So that's really this week was Learn, as part of our Learn, Earn, Own sort of Leo crowdfunding mantra. So it's about property fundamentals, it's about investment strategies, it's about deal analysis, it's about learning about property crowdfunding and why it has the potential it has. And again, this is very much about my vision of where Leo crowdfunding can get to, educating the masses. And the more people, John, we educate in each of these, then you have better informed investors and better informed fundraisers. And
it signals to the people looking for deals what other people who want to invest are willing to back. So then they can hunt more intelligently for that type of deal.
Yep. So next week, as well as talking about some of the project updates, we're also going to confirm some of the new projects that are being prepared. So I know there was a question earlier there, reference the YieldWise project. We had Chris Cleghorn on here, I suppose a month or two ago now, and he is working at preparing some deals. And there'll be an update on that next week. So for the person that asked that question, tune in next week and you'll get the update. So by way of wrapping up, John, really, again, we promote the fact that you and I offer a consultancy package for fundraisers, particularly if you're trying to understand crowdfunding and what they need to do to prepare raises and offer documents and all that sort of stuff. They can reach out to us, have a brief phone call, and if it develops into a consultancy relationship, we're more than happy to have that conversation.
I'm more than happy to have that conversation. And I think this is another way that people can share what they learn and benefit from the community when it comes to deal fundamentals, analysis, things like that.
Absolutely. Okay, so that is us for today. Thank you very much for your time. Again, remember, those who want to tune in on Monday night, 7 p.m. for the West Buildings project. And if you're even a fundraiser and just wanting to understand better this process, then tune in and just listen from the point of view of a fundraiser. It'll give you an idea of how you should be presenting your information, the sort of questions investors ask. And again, if you're an investor interested in this project, tune in. Or even if, again, it's just for learning, tune in just again to understand what questions are being asked by investors and the relevant information that you might want before you choose to invest. So again, thank you everyone for your time. Have a great rest of the week, and look forward to seeing you next week. We talk about how to earn money from property crowdfunding. All the best, guys.
See you.